Well, is money too tight to mention? Price of food and fuel is exorbitant, and the buzzword at the moment seems to be the global recession. So how in a time like this would a book such as Effective Investor help you save in a time when it seems like there's not a penny to spare? Franco Busetti is in studio this morning to put it all into perspective. He is the author of The Effective Investor. Franco, very good to have you. Good morning.
Good morning.
Well, we know the buzzword at the moment, recession. Everybody is trying to save every penny that they have. So in a time like this, how does a book like The Effective Investor play a role?
I think it plays a role all the time in the sense that investment is a continuous process and we need to be conscious of this all the way through life. In fact, the earlier we start investing, the better. The compounding effect is huge and makes a huge difference to our retirement comforts. Recessions are short. They feel very long. But in fact, in the United States, for example, since 1947, the average 90% of recessions have lasted less than 2 quarters, less than 6 months. And I think that's going to happen this time around as well. I think the US recession will end around the end of this year possibly, and we'll lag a little bit, perhaps the middle of next year. So the end is already in sight.
So there's no cause really for us to panic?
Look, as investors, recessions are opportunities in the sense that the market looks ahead. It looks ahead in South Africa by about 12 months. So long before the recession ends, the market will tend to recover, and we've already seen some degree of that.
But how do we go about investing effectively? I took a look at the book and realized for once I picked it up and there isn't all this jargon and words that I don't quite understand, which before would probably keep me away.
The aim of the book was twofold. The one was not to dumb anything down, so it contains all the most recent leading research on the stock market, particularly in South Africa. But secondly, there was a commitment to explain it very simply, to de-jargonize it, to make it accessible to the individual investor who is often on the back foot. You know, they're subject to psychological restraints that stop them investing effectively, and they're not aware of these. Hopefully the book will correct this. They also often are given misguided advice by advisors, so this book is also aimed at advisors to help them raise their game a little bit possibly. So yes, hopefully it will achieve those aims.
Does it matter how much money you have? You're interested on investing on the stock exchange. Does it matter how much money you have? And can, let's say, what you have, let's take 5,000 Rand as an example. Can you take that 5,000 and eventually make millions?
No, the stock market is not generally a place where you will become rich. It is a place to preserve your wealth, particularly against the ravages of inflation. So preservation is the name of the game. If you enter the investment world with the aim of making a quick buck, you may be lucky, you may make a quick buck, but you most probably will lose it as well quite quickly. So it's a long-term thing, and I think the book has focused very much on long-term investing, which is the most effective and the safest way to go, as opposed to short-term trading.
Give us some of your tips for long-term investing. What should our viewers who want to invest be doing, apart from picking up your book?
Look, as an investor, you have a control over just a couple of things. You can control, for example, the shares you buy, their level of risk. You can control the overall level of risk by diversifying your portfolio, buy lots of different things. You know, some go up, some will go down, and you'll have a stable portfolio over time. The third way is, here's a jargon word, time diversification. All it means is hang in there for the long term. While shares are risky, they are volatile. If you hang in there long enough, that risk goes right down to very acceptable levels. The final 2 ways you can influence things are be aware of costs. Costs can compound horribly. Just as an example, if the market is giving you a return of 10% per year, costs of just 1.5% will knock 1/3 off your wealth over 25 years. They compound quite horribly. So those are the basic tips. The main one being hang in there for the long term. Take a long-term view and stay with it. And the power of compounding, again, just grows your wealth over time very nicely.
Now, for those of our viewers who pick up your book, though, who won't have you by their side in order to explain it word by word, would you say this book is a guide from beginning to end in how to invest over the long term?
Yes, it looks at every aspect of the market, but what comes through, I think, continually is A, the long-term view, B, how to reduce risk, and finally to avoid the pitfalls. You know, we all make very common mistakes. We all have very psychological aberrations that put us into traps, and hopefully this will help you avoid them, or at least recognize them.
All right, Franco, thank you very much for coming through. Author of The Definitive Guide for All South Africans, The Effective Investor. Go out there, grab yourself a copy, and make your money work for you. Like what you heard? Email us, weekendlive@sabc.co.za, or drop us a fax, 011 714 5193.